The second part of Lecture Series 21 of Bite-Sized Corporate Reporting on IAS 21, the effects of changes in foreign exchange rates, will look at presentation currency and how to include foreign currency transactions in the financial statements of an entity. So, how does IAS 21 define presentation currency? Presentation currency is the currency in which the financial statements are presented. Where foreign operations functional currency differs from that of the reporting entity, the financial statements of the foreign operation shall be translated to presentation currency, that being the functional currency of the reporting entity. This will be covered in a future lecture series. The focus of this lecture series will be on accounting for individual transactions in a foreign currency. A transaction denominated in a foreign currency shall be recorded on initial recognition in the entity's functional currency by applying to the foreign currency amount the spot exchange rate between the functional currency and the foreign currency at the date of transaction. The spot exchange rate is the exchange rate for immediate delivery. However, for practical reasons, IAS 21 permits average rate over a period of time, provided the exchange rate has not fluctuated significantly. Question: how should an entity account for any foreign currency items remaining in the statement of financial position at the reporting date? The treatment depends whether the item is monetary or non-monetary. The essential feature of a monetary item is a right to receive or an obligation to deliver a fixed or determinable number of units of currency. Monetary items remaining in the statement of financial position at the reporting date shall be retranslated using the closing rate, meaning the rate at the reporting date with any exchange differences recognized in the profit or loss. Monetary items shall also be retranslated at settlement date using the exchange rate at the date of settlement with exchange differences recognized in the profit or loss. In the case of non-monetary foreign currency items, example property, plant and equipment, as well as inventories, remaining in the statement of financial position at the reporting date, these are not retranslated. However, if a non-monetary item is carried at fair value, the fair value shall be translated on the date the fair value is determined, with any changes in fair value recognized according to the respective standard the item falls within. This concludes Lecture Series 21 on IAS 21, the effects of foreign exchange rates, focusing on 1. Objective of IAS 21, 2. Definition of functional and presentation currency, including factors to be considered in determining functional currency, and finally 3. How to account for foreign currency transactions and balances in an entity's financial statements. The next bite-sized corporate reporting lecture series will focus on IAS 19, employee benefits.